They've mentioned in the rationale that they saw the benefits of or the disadvantages of listing be outweighing the benefits of listing, and that was with the lower valuations that the stock was getting. Frankly, since the IPO, the stock has not really done very well, and it's been trading at a hefty discounts to its peers. And then with listing, you get the additional regulatory and oversights, and there's the costs and limitations. So the benefits, and they just did the maths, and I think that's a decision that the company and the board thought is better for them in the longer term, given what strategies they need to pursue with a much longer term view versus stock markets that can look at near-term profitability.
Well, what strategies do they need to pursue? Because this kind of reeks of what happens when you have a private equity takeover of a company. As you mentioned, they say they want to focus on the mid to long-term strategy, essentially behind closed doors, out of the gaze of the public market. How much work needs to be done over at DP World then to right the ship, so to speak?
Well, they've been changing the business model from just being a port operator to more of a global service provider and doing different types of acquisitions. Now, these are very long term. The concession agreements are very long term. So, well, they must have seen over the years that these acquisitions are not really reflecting in the valuations that the management think that the company deserves. So, finally, it must be a decision that this is not the best way forward to be listed. By not being listed, they can do much more in terms of upstreaming cash, in terms of raising debt much higher for the parent company, and that's what is one of the activities they would be doing along with this delisting. So it's very clear that they have certain things in mind, and they've been advised to delist as a better strategy.
Nishit, I wanted to understand what this means for the domestic capital markets in the UAE, because DP World was the hallmark stock on Nasdaq Dubai. This is one of 3 major exchanges in a relatively small country competing for business. Do you think that this is a vote of no confidence in the trading institutions in the UAE?
Well, it's not like a vote of no confidence, but yes, one has to check whether we need 3 exchanges for equities. And from Nasdaq Dubai perspective, yes, it is a huge loss for the exchange, given the size of the company and the amount of trading that used to happen within the exchange. So yes, it's a setback, but I guess there are multiple other products that can be done, that can be introduced, that can be focused in Nasdaq Dubai. There's so much more to be done on the futures market here. There's so much more to be done on the fixed income. That market is booming. So there are other asset classes that can be explored by Nasdaq Dubai, while in the equities portion, we already have DFM, we have ADX, so we have 2 different exchanges in the country already. So I don't think it's like a huge setback on the overall regional market. Yes, it is negative for Nasdaq Dubai from an equity perspective, but they have other options to pursue from here.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.